What is fraud? Fraud defines as an intentional act by one or more individuals among management, those charged with governance, employees or third parties to gain unfair or unlawful advantage which will result injury or damage to others. There are several types of fraud such as bribery, stealing money, financial statement fraud and asset misappropriation. Bribery refers to a situation when a person offers, gives or receives of anything of value to influence others. Bribes can take the form of gifts or payments of money in exchange for favorable treatment such as awards or titles. As an example, employees, managers or salespeople of a business may offer money or gifts to a potential client in exchange for business. Stealing money from the company bank account. It usually happens to a small company which there is no segregation of duties. As an example, the person who in charge the bank account are same with the person writes in the checks. Financial statement fraud involving the misrepresenting financial statements by a person doing overstating assets or revenue or understating liabilities and expenses. This types of fraud typically perpetrated by managers who seek to enhance economic appearance of the organizations. The members of the organizations may benefit from the selling the stock, dividends or bonuses. Asset misappropriation involves stealing of cash or assets such as supplies, inventories, equipment and information from the organization. The person who commits the crime will try to conceal the theft by adjusting the records. Next, what is fraud risk assessment? Fraud risk assessment is a tool that assists management and internal auditors to systematically identify where and how fraud may occur and who will be in position to commit fraud. It also concentrates on fraud scheme and whether the controls can be deceived. There are 5 steps of fraud risk assessment. First step, identify relevant fraud risk factor. The process includes review of documentation of previous fraud. Review suspected fraud committed against or on behalf of the organization. Evaluation of related fraud and review the organization's performance measure over the past few years with its competitor. Second step, identify the potential fraud scheme and prioritize them based on risk. Identify fraud schemes through brainstorming, conducting management interviews, using analytical procedure and reviewing prior frauds. Some of factors are to be considered when prioritizing fraud risks are impact of monetary loss of productivity and impact to the organization's reputation. Step 3, maps existing controls to potential fraud schemes and identify gaps. Identifying the preventive and detective controls in place to address each fraud risk and potential fraud. Anti-fraud controls is an important element such as whistleblower protection policy, board oversight and good communication. Step 4, test operating effectiveness of fraud prevention and detection controls. Internal auditing play an important role in assessing the operating effectiveness of internal controls. Example, organization implements security passwords to change every 30 days, but if the password not changed as required, the network system may not block access to the user. From this case, we can conclude the internal controls is present but is not effective. Step 5, document and report of the fraud risk assessment. Key element would likely to be documented include the types of fraud, the business impact of a fraud and the significant fraud occurring. There are 3 common characteristics of fraud that will be explained through fraud triangle. 3 characteristics are pressure, opportunity and rationalization. In order for fraud to be occur, all 3 characteristics must be present. Pressure. Pressure is what causes a person to commit fraud. Most of the time, the pressure occurs because of financial needs or problems such as higher payment for medical bills, higher tax payment. But sometimes, some fraud committed simply out of greed done. Opportunity. Opportunity is the ability to commit fraud. It happens because of weak internal controls, poor management oversight and authority. Opportunities fraud for happen will be increasing if failure to establish adequate procedure to detect fraudulent activity. Rationalization. Most important parts in most frauds. It involves a person reconciling his or her behavior with commonly accepted notions of decency and trust. Example of rationalization to committing fraud are: the person who commit fraud to save a family member or loved one, or the person think will be lose everything such as family, house, car, if they don't do the fraud. The end. Thank you.